Hi, Tasty Nation. This is Dr. Z, also known as the Canadian Options Trader. I'm going to talk about my SPX 0 DTE trade. I originally learned about this trade from Tammy Chambliss, and I'll put a link to her video in the show notes. I've tweaked the strategy a little bit to make it more in line with what I'm comfortable with. And I think the key to this strategy is you got to stick to the mechanics. Whatever mechanics you choose, you got to stick to them for the numbers to work out. So here's my Google spreadsheet that I've logged all my trades in. I've been pretty diligent with putting the exact times and entry prices, which strikes I used and all that. And I've pretty much traded every opportunity I could that had a 0 DTE expiration on SPX. So this is a 50-point wide Iron Condor that I trade. So I'm putting up $5,000 in buying power to do this. Here's my trade plan. And by the way, I'll put the link to this spreadsheet in the show notes as well. So the trade plan is to sell both sides at the market open, so an Iron Condor, 50 points wide. Once I get filled on the sell order, I immediately put in my order for the stops on the two short strikes. So a stop order on the short put and a stop order on the short call separately. I aim for roughly 3 to 4 delta on the shorts, and this is in IB. Roughly, I aim for about $2 on the whole Iron Condor. Maybe, $1.50 or something like that would be the absolute lowest I would go. But I realized after trading this for a while that the delta that IB shows doesn't necessarily line up with the deltas shown in other platforms. So Tastyworks, of course, I would use that if I had the opportunity to. This is just an estimate on my part here, but the actual delta that I'm getting on the strikes I think is closer to 6 to 8 delta, even though IB is showing 3 to 4. That's just my estimate. It's hard to know for sure because I've never had multiple platforms open at the same time to compare deltas directly. The bottom line is it's well known that IB underestimates delta on the 0 DTE expiration options. The last part of my strategy is I never re-enter after a stop out. I can tighten stops towards the end of the day, but I never close early. All these points here come from Tammy's data that she's presented. Tammy's strategy has had a lot of influence on my strategy, and I realize she tweaks hers over time, and I have as well. This is an evolution of the strategy I came up with, and this is the strategy that I'm most comfortable with. So here's my log. I'll go right to the graph. The proof is in the pudding, as they say. So these are the actual trades I took. You can see my P&L curve here. It's upward sloping, which is great. It does have some significant drawdowns here, though, and that's one of the downsides of this strategy. You have to be able to withstand those drawdowns. So, that alone would tell me I would not trade this with a huge portion of my account because I don't want to see my account being drawn down like 50% or so. If I take just one contract, for example, I'm putting up $5,000. That is the max risk I'm taking. With the stops, I've reduced that max risk, of course. I can stomach these drawdowns using a small portion of my account. So that's up to the individual. So my win rate here is only 54%. Using stops is definitely going to lower your win rate, as you would expect. But using the stops also saves you from the big losers. So selling like the 3 delta, you would expect it to be a 97% profitable trade. However, if you didn't put a stop in, you could have a huge loss that could totally ruin your P&L curve. So that's why you wouldn't want to trade this without stops. Most of the stop outs have been on the put side. This is always changing, of course. The average P&L, only $23 per trade. It's not great. But again, I made some mistakes early on, and I've evolved this strategy as I went through. What I was doing up until about September, so maybe the first third of this graph, I was actually re-entering after I would get stopped out. That was just a misunderstanding on my part, not knowing what is the ideal strategy to use. And I settled on the ideal strategy is never re-enter after a stop out.
I can see!
So then I decided, well, why don't I tabulate the exact same data, what my results would have been if I never re-entered after a stop out. So the average P&L got much better if I had done it this way. And this is why I'm choosing this strategy going forward. So $28, almost $29 average P&L per trade. This is just one contract, of course. You can do however many contracts you want, but this graph is showing for one contract. So after about 100 occurrences, just over 100, it's a nice upward sloping P&L curve. It doesn't have the drawdown that the other version that I just showed had. So this is my ideal strategy going forward. I think it's a great strategy.
Looking good, Billy Ray! Feeling good, Lewis!
Feel free to copy the spreadsheet and tweak it to make it your own. Thanks a lot to Tammy for teaching this strategy to everyone. She has not asked for any compensation for this. She has been really great at answering questions and guiding people through their own learning on trading options. And I'm really appreciative of Tammy and the Facebook group.
I appreciate this. Oh, this is beautiful. I can't believe. Thank you. I just don't know what to do.
So just a quick example of one of these trades. So today, Monday, February 8th, I put in my trade at 9:32, 2 minutes after the market opened. My short put strike was 38.75. My short call strike was 39.30, and the total credit of 195. So that's where I was aiming for, around $2. The commission, the stop, I just do a quick calculation of what stop I would put on the larger side. Usually the put side, I'm collecting a larger credit because I'm going by delta, equal delta on both sides. So the puts are usually going to trade a little bit richer than the calls. So in this example here, my put had a credit of 144. So I just multiply that by 3, and that gives me a stop of 4.4. So if I win today, I would have a total credit of $190, which to me is a great return. One downside of this strategy, even if I go to the ideal case shown here, is the drawdowns, consecutive losers. We had 1, 2, 3, 4 losers in a row here. We had 4 losers in a row here at first week of January. We had 4 losers in a row here at the end of January. So that really sucks. These drawdowns really suck. And this is why I wouldn't trade this with a significant portion of my account.
Those absolutely happen. Those types of events happen. So you might have 4 losing trades in a row.
Now, another weird thing happened here back in July. I think some of you also may have experienced this. There was a double stop out in July. That counts as 2 losses in a row on the same day, and that sucks too. So to get stopped out on both the call and the put side, we would expect that only to happen about once a year. This reminds me of when Julia talks about flipping a coin, something that's, a 50-50 shot. In our case, we're expecting this to be a 53% win rate. If you were expecting a random outcome of that 53% win rate, you wouldn't necessarily think that there's going to be a string of winners and a string of losers, but that's how random numbers work.
We don't perceive randomness that way, but that is exactly what randomness is that even though that probability of having 4 consecutive events in a row is low.
And so it's going to happen from time to time in your portfolio. It's going to happen to every single one of us if we trade long enough. Trust the process and keep following the protocols. Like my results are going to, mirror what we see here on this slide.
So I just added in my bird and elephant pictures here. This is the idea of eating like a bird and pooping like an elephant. So the stops are supposed to save you from the drawdowns, but there's still the drawdowns. This originally comes from the bat, of course, when he says,
typically eat like a bird and poop like an elephant. I think it's too much pain.
Karate man bruise on the inside. They don't show their weaknesses.
Okay, thanks for watching, everyone. I hope you are also successful in your 0 DTE trades. This is not an easy trade to do, but if you learn the strategy, stick to the mechanics, maybe tweak it a bit to make it your own, I think you also might achieve some success.
And I love it.
So good luck with your trading, and thanks for watching.